Each quarter, Baruch College of the City University of New York conducts its CFO Outlook survey, asking 200 chief financial officers of public and private companies for their take on the state of the economy. And this quarter, CFOs are cautiously optimistic. That's not a phrase you expect to hear from an executive. Baruch's optimism index has risen slightly from last quarter, but is up only 2% from this time last year. But what are America's CFOs saying about hiring and about mergers and acquisitions? Well, here to discuss the findings of the third quarter CFO Outlook survey is John Elliott, Dean of Baruch College. John, thanks so much for joining us.
Thank you. My pleasure to be here.
Let's talk about, hiring was the first thing I kind of scanned through to check out in this survey. They are more optimistic, CEOs, about the nation's economy and about their own companies, but they don't seem terribly optimistic about hiring, even at their own companies.
Well, I think you're right. The average firm is going to hire 4% or so increase in hiring, and that's good news. But some firms aren't adding themselves to the group that intends to hire, and we don't know yet how that will translate into real changes in unemployment. And there, when you ask them the question on a global basis, where do they expect unemployment to be, a year from now they still expect 9%. So whatever they're doing individually is not making a grand difference in the overall picture.
Right, and I see 56% of the CFOs that you surveyed expect to hire, so about half. But they don't think that the situation is going to improve nationally. It's interesting because last year when you did this survey, they were very pessimistic, the CFOs, about the U.S. economy, but they were more optimistic about their own companies, and now those two things have kind of caught up to each other. Well,
I'm not sure they have, because there's still a major difference. The own company expectations are around 69 on a 100-point scale, and the overall economy are around 55 on an overall scale.
So still a 14-point gap.
Yes, exactly.
And there was previously, a 13-point gap.
More like that, yeah. What's interesting is if you go back to 2004, the gap was more like 6 points. The own company was about 76 on a 100-point scale, the overall economy about 70. So you can see on the one hand, we've got a ways to go before either of those gets back to where it was in 2004. On the other hand, if you think about where we were in the first quarter of 2009, we've come a long way from those levels.
You do see CFOs responding that not only will they increase profits, which we know in the last couple of years was easy to do by simply firing workers, but they expect sales to climb 8%. They expect also capital spending to rise 11%.
Exactly right. And they see a 13% increase overall in net earnings. So you've got three very positive numbers there that should have a positive impact on the economy. What I think is a little worrisome is, as you pointed out, they're generating some of those profits by cost control and by cost cutting, and you can't work your way out of a recession with cost control.
What do you think we're going to see for M&A? I mean, it's been kind of heating up this year, or at least it was until last month. We saw, against really all odds, M&A picking up, and it seems that companies had so much extra cash they needed to do something with it. Do the CFOs expect to continue on that down that path?
They are looking optimistic in that arena for the first time in quite some time. So they generally are saying both thinking about the prospects of being acquired or the prospects of acquiring someone else. The favorable environment is much better than it was a year ago and 2 years ago.
It's interesting that they see rising sales and rising capital spending. What do they think about demand, though?
Well, you'll notice that they don't see much happening in terms of prices. So usually with a lot of demand, you see inflation occurring, you see prices rising, you see demand pull for the economy, and they're not expecting to see much change in prices. They're looking for a fairly benign environment relative to inflation and relatively benign relative to prices of their own products.
How far out do you survey them? Because it's interesting to see what people's expectations are. For example, consumer confidence, the numbers are bad for now, but they see a much better situation 6 months from now, and that seems to me a more relevant number, at least for consumers.
Depending on the question, we look at 6 months out, a year out. We rarely go beyond that. And what's interesting is if we look back 6 months to what they said about unemployment rates, for example, their expectations were quite consistent with what actually transpired.
So bottom line, they see a rebound, but not a huge run-up. Is it kind of a new normal?
Well, it certainly is the case that everyone who's talking about a gradual increase, a slow, steady growth, seems to have a picture that the CFOs endorse.
All right. Hey, John, thanks so much for joining us.
It's a pleasure.
John Elliott,
glad to be with you.
Dean of Baruch College.